Hi, every guys. Welcome to the market update. My name is Vinnie, and we got our favorite CPA, count expert, tax expert, and he's going to give us some great nuggets. Thank you, Fred, for being here.
Thank you. Thank you for having me.
Well, before we get into anything else, I'm going to throw below the updated active properties, pending properties. Just one quick little nugget. Active properties have trickled up a tad bit. Pending properties have gone up, but active properties have gone up a little bit more. So that's a slight positive, nothing drastic. And I really want to get, because it's tax season right now, and there's a deadline to be had if you own an S Corp, if you own your own company. Fred, why don't you give everyone the quality news that you have?
Well, the good news is you have until March 15th to take advantage of the new state and local tax credit called the pass-through entity credit, where you get to make a payment with your S Corp or LLC. On the left hand, you get a tax deduction for it. On the right hand, you get a tax credit for it as well. So a lot of my clients would say, Fred, can I double dip? And usually the answer is no. And this is one case where you can actually do that, and it's legal. So it's not a bad deal, especially when California lets you get some sort of a benefit.
Yeah, not a bad deal at all. So if you're filing your taxes, can kind of planning, you own your own company, you're planning to purchase this year and putting it in there, make sure you talk to your accountant. If you don't have an accountant, CPA, and you're still doing it online yourself, text below, reach out below. There's Fred's number. It's in the clicker. Reach out to him, and he might be able to help you. I don't know. I know he has all his clients he's trying to take care of, but are you able to take on one or two more clients? Fred?
No, sure we can. We at least we can consult with, if you're a good candidate for the pass-through entity credit, because it's there's limits on it as well. If it's a profitable business, maybe we can help you out.
Perfect. Well, also below, want to get into the last question we have, and we'll get Fred's. Let's see Fred's response. All right. So, how much is the least expensive attached property sell in Coronado so far this year? What's your guess, Fred? Least expensive.
Least expensive in Coronado, 1 million.
You'd be surprised, and a lot of people were surprised. 657,000. Yeah, no. If you're not familiar with Coronado, it's really hard to find property under $1 million. I have no clue what happened here, why this one sold for so cheap. But if you have a dream and you want to purchase, it's best to talk to a realtor. Give me a call, and love to help you out. Here's the question that we're going to work through this week. What is the most expensive detached property to sell? Oh, and that's actually incorrect. It's actually Escondido. So I got to change that. I'll change that real fast for the question. I don't even think there we go. Okay, perfect. All right. Now it's saving. Okay. What is the most expensive detached property to sell in Escondido so far this year? Do you have a guess? Escondido. What do you think, Fred?
I'm going to say 3.5 mil.
3.5 mil. Okay. Well, you'll have to stay for the next week to see if you got your answer right. And if you want to take your guess for your chance to win $50, text below and you can win $50 right there. Fred, when people are planning to purchase, I mean, is there what's the balancing act of paying less in taxes compared to qualifying for more? I mean, is there different thresholds, or how does that conversation go with you when basically a client of yours is going, hey, you know what? I might not want to write everything off this year because I'm looking to purchase end of the year. What does that conversation look like with you?
Well, we get those a lot, Vinny. Thanks for asking. It's usually the business owners, and they say, well, I don't want to write off all my expenses because I want to be able to get a loan for a purchase of a property or whatever it is. And I mean, I just basically tell them, you can't pay lower no taxes and qualify for a loan. You can't have it both ways. So if you want to get that loan and you don't report all your expenses, that's your prerogative, and we move on.
Does it ever come to the point where they go, okay, I'm looking to maybe have around this ballpark of showing income? Can we try to find? Can we only have some of the expensive and not all the expenses, or is it? I mean,
Well,
what kind of
one of the
feedback?
things I tell them, sorry to interrupt,
Yeah.
is to have a real good conversation with the underwriting guidelines
Mm,
to know exactly, because there's so many times we help clients, okay, we do this, and then they don't get qualified for some reason, or they think
mm,
the rules changed, or something didn't work. So we're not, so to have to pay more taxes and still not qualified, not a good thing.
yeah.
Um, so really good conversation, and know the numbers with the loan officer, underwriter, so that everything is upfront and clear. Then we can work together to make it happen.
Well, I mean, a key takeaway right there is if you're looking to purchase, you know, this year or even beginning of next year, talk to a lender. All right. And talk to them and kind of go over the numbers. And then you have more information to provide Fred when that time comes about. It's going to make your life, his life, everyone's life a little bit easier. So talk to a lender, talk to the underwriter, figure that out. Uh, and we'll see. It's so hard. People ask me, okay, how can I plan? What can I qualify end of the year? Rates are going up, values are going up, and that kind of brings me to my next idea. Next point is the median home price, as you can see right here, is a little under 800,000 in San Diego County. Now it jumps up a little above 900,000. Yes, you heard me right. Uh, we've gone from about 850 to a little over 900,000 for median home price in San Diego County for detached properties. I know, pretty surprising to think about. So if you're buying a property that's under 900,000, you're getting less than the median home price out there. So things change, and you can kind of. I'll go back to this. You can kind of see where it's jumped from. Beginning of 2021, we were talking about 750,000, and now we're at 900,000. So a lot has changed over a year. Don't think that's going to happen, but you never know. Yet more information is definitely more power. Fred, any last words of wisdom? Anything that people should be aware of, or questions they should ask a CPA if they're not able to get a hold of you to make sure they get the right person?
Just to make sure you get all your deductions for those of you that have rental property. Very common is to miss, whether it's management fees or a variety of different things. Once you own a rental, there's so many expenses that you can write off. I've been seeing that people are missing deductions there. That's a very common item to miss.
Do you for your clients? Do you have like a checklist, or is it
We
them
do.
putting?
We have a
Okay, you do have
checklist
a
for all
checklist.
those expenses. Absolutely.
Okay, and for people watching right here, if again, if you don't have a CPA and they're not asking those questions, they're not breaking it down, or at least having some sort of checklist, you might want to make sure that you're with the right person because deductions can be very helpful.
Yes, they
Let's
can.
if you don't have someone looking out for you, you'd be paying a lot of money to Uncle Sam, and wouldn't you rather have that money in your pocket so you can have a nice little vacation?
Absolutely.
Well, thank you guys for watching. Thank you for subscribing. And if you have any questions, please reach out to myself or Fred. Thanks, guys. Have a great one. Bye.
Thank you. Take care.